Hello, everyone, and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Stock markets in the US, Europe, and India faced selling pressure, but market indices soared in China and extended three-week rally to a whopping 25%. On Wall Street, investors shifted focus back to the US economy after strong payrolls reported on Friday reassured resilience of the labor market. The U.S. economy added 254,000 jobs in September from the upwardly revised 159,000 in August. Job additions in September were the strongest in the last 6 months and higher than the average over the prior 12 months. Jobless rate held at 4.1% and wage inflation stayed at annual 4%, indicating upward pressures on the overall inflation. U.S. job openings increased in August and both the number of hires and separations changed little, and within separations, the number of quits trended down to the lowest since August 2020, meaning employees are finding harder to switch jobs. The number of job openings increased 329,000 to 8 million in August from an upwardly revised 7.7 million in July. Across the Atlantic, consumer price inflation in the euro area slowed to 1.8% in September, largely reflecting higher base of energy prices in the previous year. Inflation is expected to pick up in the months ahead as energy price begins to softening in the late last year. Germany's consumer price inflation declined below the ECB's target rate of 2%, largely because of the 8% plunge in energy prices. Core inflation slowed to 2.7% from 2.8% in the previous month, following the slight decrease in the service inflation. Consumer price inflation in Switzerland decelerated to 0.8% in September from 1.1% in August. The inflation fell to the lowest level since September 2021 and dropped below 1% for the first time in 3 years. The jobless rate in the euro area held steady at 6.4% in August. The unemployment rate stayed at record lows and stayed resilient despite an elevated interest rate and weakening manufacturing sector activities. On the economic front, Japan's annual retail sales growth slightly accelerated to 2.8% in August from 2.7% in July. Retail sales increased for the 29th month in a row, supported by the increase in wages, which continue to support higher consumption of basic items. In other economic news around the world, the service sector in the U.S. expanded at the fastest pace in over 18 months in September, amid strong activities in the sector for nearly 4 years. China's manufacturing showed weakness for the 5th month in a row in September, but service sector activities improved slightly. Japan's industrial production declined in August, manufacturing extended contraction in September, but the sentiment among large manufacturers was steady in the third quarter. Let us review key events in global bond, currency, and commodity market last week. The yield on the 10-year U.S. Treasury edged higher to 4% after evidence that the U.S. labor market remains strong, lowering the urgency for the Fed to deliver aggressive rate cuts in the immediate future. Crude oil prices surged 8% to about $75 a barrel as Israel stepped up attacks on Lebanon and prepared to strike Iran's oil infrastructure. Natural gas prices rebounded 5% to 40 euros per megawatt hour due to escalating worries about widening war in the Middle East. The euro hovered at $1.10 after the latest inflation data in the Eurozone, and Germany supported the case for ECB to lower rates at its next policy meeting. The yen weakened 3% to 145.50 against after the newly elected Prime Minister and BOJ governor poured cold water over the prospect of a rate hike later in the year. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite rebounded from the midweek losses after the U.S. economy added more than expected jobs in September. European markets halted a three-week rally after escalating tensions in the Middle East weighed on the market sentiment. The Nikkei 225 stock average rebounded 2% and extended weekly gains to the fourth consecutive week after rate hike worries in the immediate future receded and the yen traded lower. Hong Kong indices surged about 10% after a stimulus rally turned into a market frenzy in the hopes of significant fiscal stimulus to follow sizable monetary measures a few weeks ago. Indian market indices fell 5% as investors worried about the negative impact of rising crude oil prices and Middle East tensions on goods exports. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. AT&T agreed to sell its 70% stake in satellite TV company DirecTV Entertainment to a private equity group TPG for about $7.6 billion in cash payments stretching to 2029. Bank of America was in focus after the Warren Buffett-controlled Berkshire Hathaway continued to reduce its holding down to 10.2%. Rivian Automobile declined 7% after the luxury electric vehicle maker trimmed its annual production outlook by 10,000 to 47,000 units. Spirit Airlines plunged 32% after a report said that the company is considering filing for bankruptcy protection from its lenders. Levi Strauss dropped 7% after the denim maker reported mixed quarterly results in the third quarter. Tesco, the British grocery company, reported an increase in revenue and profit in the first half and lifted its annual outlook. Alstom, the French rail mobility company, received orders from supply chain procurement company Proxima for 12 high-speed trains. Separately, the company also reiterated its annual operating outlook. Li Auto, BYD, NIO, and XPeng advanced after China's electric vehicle sales in September soared to 1 million units, increasing their market share to 54% of all deliveries. JD Sports Fashion, the UK-based fashion retailer, reported record sales in 26 weeks to August and reiterated its annual outlook. Tesla, after the electric vehicle maker reported slightly less than expected delivery. Nike, the athletic footwear company, reported better than expected revenues in the latest quarter. In the week ahead, investors are looking forward to the release of U.S. consumer and producer price inflation report for September. Investors are also anticipating consumer price inflation to ease to 2.3% and PPI to edge higher to 0.1%. Investors will also review the FOMC and the ECB monetary policy meeting minutes and hope to get deeper insights into the latest rate decision. Next week, investors are also awaiting the release of retail sales in the euro area, and international trade balance in France and Germany, and international output data for Germany. In Asia, Japan is scheduled to release its current account balance, and the Reserve Bank of India is likely to leave its policy rate unchanged. Markets in China are scheduled to reopen after a week of national holiday amid high expectations of fiscal stimulus measures. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next week.